All right. Welcome back, my friends. This is Dustin Nemos of DustinNemos.com, and I am joined, as promised, by Lynette Zang. Very exciting interview today. She's the Chief Market Analyst at ITM Trading, involved in the market since 1964. Her mission is to translate financial noise, and ITM Trading helps people to develop, personal trading strategies. And she is, on a personal note, one of my favorite sources for, all things economic and reset. How are you, Lynette? Yeah, of course.
Wonderful to be here today.
Well, it is an honor and a pleasure to meet you. I chatted you up a little bit, and I've already probably inflated your ego before the video. But I talk about economics on my show. I talk about a lot of things on my show: health, economics, politics. But there's big stuff in the market. The reset is coming. I think everybody they feel something. People may not know what's going to happen. They may not know how to follow these things. And I've got some questions for you, but if you don't mind, I'm just going to jump into the list. All right.
Go right ahead.
Okay. So first of all, the physical markets, and people have been buying gold and silver for so long. I'm one of them, waiting on things to turn, always promising that things are about to happen, and it never does. And we know, who are in the market, that the big guys are playing with the ETFs and the paper markets, and they're just squashing the price with manipulation.
Right.
One of the things I want to ask, on a personal note and for others, is how long that can hold, and are there any signs of it cracking?
Well, it can definitely last a lot longer than anybody would anticipate that it could, because after all, when they don't like the way the rules are working, they simply change how they account for things. So it's really hard to say exactly when that part of the manipulation will stop, because you can even look down at Venezuela, and on the normal market, the price of gold was exploding and has been really since 2013, but the official price of gold was held down until February 7th. And then, and this is the piece that people need to remember. Okay, number one, all in due time, just not necessarily mine. But at some point, that is actually how the reset is performed, is by revaluing the fiat currency against gold money. So bullion or monetary gold. So it will last until they either lose control of it, because we've certainly witnessed that in 2008 when you saw the paper markets, plunging in both the spot gold market went down like 32% during the crisis, and the mining stocks also plunged. But in the physical only market, which is not visible if all you're watching is the computer or the TV, then we saw those, actually the physical markets, there was scarcity, so you couldn't get your hands on stuff. I mean, I remember having to wait 3 months for delivery. This time, I don't think we're going to have that option to wait 3 months for delivery, frankly, because so much of the physical gold and silver has already been pulled off the market, and it's not coming back on by anybody that really understands what's happening. But I can tell you, for the collectible market, that's when those coins made this trend high, was as those paper markets were plunging. So, they'll continue to do that as long as it serves their purpose to keep you away from participating in the gold and silver market. Paper, they don't care so much if you do ETFs, because that's just a contract to a trust. It's not actually the physical metal. It's only the guys at the top of that food chain, like a JP Morgan, that can take physical delivery of the gold or the silver that's inside of ETFs. You or I could not do that. We're not authorized. So they can manipulate the market in so many different ways so cheaply that, yeah, they can keep this up for a while. It doesn't mean that on the physical market you'd actually be able to buy it, though, because it's that scarcity piece in the physical market If the wholesalers have a hard time getting it, they're going to charge you a premium regardless of what the spot price says. And we know that even just from 2008, and even more recently, we had some delays in delivery. So
I remember the premiums. I remember the long wait times. I'm hearing now from people in the industry that it's getting a little bit more scarce. And we've heard the statistics that silver is running out. What's your take on that?
Well, it is, because it actually gets used up in industry, and silver is also a byproduct. So they don't actually go and mine specifically for silver. Silver is more of a byproduct. So yeah, it is getting used up, and it's used across the entire global economic spectrum, as is gold. But the difference between the two is gold, while it's used across the economic spectrum, that doesn't get used up. So it's a better tool for accounting, which is why they revalue the currency against gold and not silver. But both of them are monetary metals, and both of them, there is a finite amount of it, period, end of discussion. Even with a new find of some, gold hoard somewhere, there's only so much of it as compared to any of these digital or fiat money products, which are frankly unlimited, because that's a button push on a computer.
So you mentioned Venezuela, and I know that I'm a silver guy more than a gold guy, but I like the
I like both.
ratio. Yeah, I was going to ask, but I like the ratio. I think it's like 80-1 or something right now. Historically, I think it's 16-1, right? So in Venezuela, gold actually did better during the reset, at least when I had heard a while back. And I kind of expected silver would do better. And I guess that was more gold's reputation as money than anything. But what do you think? Obviously, the physical markets are shrinking, but what do you think is going to happen in the U.S.? Will it be gold that benefits the most?
Well, I mean, historically, that's what supported, not just in Venezuela, but I recently did a piece, and we saw the same kind of behavior in Germany's hyperinflation in the 20s. So, and that's because the reset occurs against gold. Having said that, keep in mind, for me, I don't really care so much about that, gold to silver ratio, because mentally people are thinking about it like a trade. Oh, well, silver is going to go up a whole lot more in terms of fiat. But the reality is when this happens, when it becomes visible to everybody that we're in a hyperinflationary event, both gold and silver will hold your purchasing power. So for me, it's about functionality. What is it that I want to accomplish? And silver is, for me, about barterability, simply because if I want to buy a pint of strawberries, I don't want to take a gold coin in there. You can carry a lot more wealth in a small package with gold, but change becomes irrelevant. So I want to go in with a pre-64 dime, which is, roughly, not quite, but a tenth of an ounce, or a quarter, or a half an ounce, or an ounce, depending upon what I want to purchase or convert that silver into. That for me is the function of silver. And speaking about what happened with Venezuela or Germany or any of those other places where during the reset and hyperinflation, at some point there is a division between the performance of gold or silver. If you have enough barterable gold, or if you have any gold, you will, chances are, I mean, I can't guarantee this, but chances are, because this has been true 100% of the time, you can always convert your gold into silver at that time so that you have more of it. So you want a certain level of silver going into it, because for a while it maintains and probably shrinks that ratio. But And part of the strategy that I developed just based upon repeatable patterns that we execute here, really, if you have your barterable gold, then when that division happens and gold starts to outperform in terms of fiat anyway, silver, well, you can always just convert small pieces of gold into the silver so that in reality, you are now getting the same level of purchasing power. You're not losing it with the silver. But understand this too, part of the strategy, you want cash as well that is completely outside of the system, because for people, that's the most recognizable money at this point. So even though we know it's going to lose all value, you still have to have a certain level of that for the initial hyperinflationary push. Then you want the silver for that next push, and then you want some of the barterable gold that you can convert into the silver, which is more easily usable for your day-to-day purchases, and then you won't experience that big discrepancy. Did that make sense? It was a little complicated.
No, yeah, it did.
Okay.
As you were talking about it, hyperinflation and such, I want to get into that. I remember seeing the images that circled really widely from Venezuela. It's like a plate of chicken or a piece, a loaf of bread, and it's a stack of cash on a table to be able to buy it. And
exactly.
It's pretty wild.
Oh, well, yeah.
So how do you compare? This is a big one for me because there's two narratives. There's the Trump is kicking butt in the economy and everything is great, and then there's the everything bubble fiscal cliff about to pop. Now I love Trump, but I don't believe that the economy is doing all that well. I think we're facing the end somehow. What do you think about those?
Well, 100%. But part of what everybody needs to understand is if a government official or a central banker actually came out and openly told you the truth, then behavior would change like that. And they don't want the behavior to change. So their job is to be a cheerleader to your face while they are to your back, if you know what I'm talking about.
Yeah.
Actually, this is a report that I'm running later today, or had just run, depending upon when this airs. And it's really all on the fate of the consumer. And it is definitely an everything bubble. That's all where all that money printing went. It hyperinflated, re-hyperinflated real estate stocks, bonds, derivatives, okay? So there's your everything bubble. But at the same time, consumer spending is almost 70% of the global GDP. And the balance of the spending comes from the government, which taxpayers are responsible. And all of that spending, or not all of it, but at most by a very wide margin, most of that spending is done by taking on debt. I mean, prior to '89, income plus savings was enough to spend, to accommodate your spending. But after '89, that's when that shifted, and inflation, because wages never keep pace with inflation by design, people, in order to maintain their standard of living, started taking on more and more and more and more and more and more debt. Now, the key in here is that debt has been turned into derivative securities by Wall Street and turned into products that are now fully embedded in retirement plans, because they are in mutual funds, they are in ETFs. That means variable annuities, 401ks, IRAs, 403bs, you name it, has these derivative time bombs embedded deeply within the system. So if the consumer stops repaying, stops spending, stops taking on debt, that could easily be overwhelming to the central bank's ability to hide the next catastrophe.
So that brings to mind, of course, retirement, Social Security, Medicare, all of these things that they can't afford it as it is anyway. Those things are going bankrupt. But do those things just die overnight during the reset?
Well, they don't really die overnight. And, I think part of it is they will use the crisis to pull back some benefits that they pay. But even if they index, and they've started in this country, President Trump is now proposing to index some gains against inflation, right? Now they've indexed Social Security against inflation. And of course, it never really keeps up because they just change how they account for inflation. But that his proposing the indexation of capital gains is definitely a way to let you know that high inflation is coming, because that's what they did in Israel. Israel was running huge inflations as they were becoming a new country, and they still are. And they indexed everything to the inflation so that people wouldn't complain about it. So now this is a recent thing for them to talk about indexing gains to inflation. And that sends up, for me, that sends up a big red flag, because they know darn well that they are going to push prices higher faster.
Okay.
And so even if they index, say, Social Security payments and you get more, it doesn't matter. As you said in Venezuela, if it takes a stack of bills like this, you can't even see the top of my hand, to buy a loaf of bread, it's because those bills have no value. So Social Security, even if they don't stop it, because I think there'd be too big an outcry over it, it's frankly irrelevant, because they're giving you dollars that have no value. Big deal.
So with inflation, you bring up an interesting thing there. We've seen just years and years of money printing, just massive money printing, and we've had inflation. I mean, there's the official rate, then there's the shadow stats rate where they track it the old way, and it's much, much higher. And I tell
he's
people,
brilliant.
Yeah. And I tell people, go look at your personal, like, top 10 items that you buy and compare it to 10 years ago. That's like your kind of your personal inflation rate. But where is all that money that they've been printing? Is it just the big guys? They're just buying up stocks, and that's what's leading to this everything bubble?
Well, that's a really interesting point, because number one, it's easy for us to say that they're just printing money, but it really is much more than that, because in order to print that money, they're creating debt. So remember, taxpayers are responsible for any government debt that they take on, and we're running massive deficits, and this will happen now as far as the eye can see. And the biggest part of that happened when the crisis began in 2007, 2008. So, but what happens when they do that is the value of the currency goes down and down and down. And so whoever gets to use that currency first, which would be corporations, because you have the central banks that create that currency. If you think of it like a wheel, and the central banks are in the center of the wheel, and then the first thing you have are the banks around it. The government does not go directly to the central bank to borrow that money. They have to go to the commercial banks to borrow that money that the central bank creates. That puts the commercial banks at a huge advantage. Then it goes to the government and other corporations. By the time it trickles through to you and me, we're on the furthest side of the spoke. It has lost a tremendous amount of value. And all of this new money, I mean, you've been following my work. I always look at what are the insiders doing for themselves, right? And so in theory, and even in reality, because of the way the system is set up, the stock markets are supposed to inflate at or near or above the true rate of inflation. And who really owns most of the stocks? Right. It's the insiders. It's the one percenters that do. And even for those of us that believe that we own it through 401ks or other retirement plans or pension plans, well, in reality, what you have is a contract with those that manage other people's money. And it's another way to generate hidden fees that you don't even realize that you're paying. So it's really a wealth transfer mechanism from the many, from the masses to the few, to those at the top, the 1%ers, the bankers, the corporations. And look at corporate profits. I mean, good God, they are exploding, the highest levels ever. And understand this about those corporate profits. Well, those are coming from sales, right? The sales of their goods and their services. And it's the sales of those goods and those services that define what the inflation rate is. But wages don't keep pace with those goods and the services, and that's what enables that income inequality, so that the guys at the top of the food chain, the insiders that are managing these corporations, the boards of directors, etc., that's where that money's going. The John Q. Public, that's not going there. And that's really the big problem, because the question is, how much more debt can the consumer absorb? Now, they did just change the way that the credit ratings were calculated, and that went into effect the end of 2017. And then, of course, we know we had the tax breaks and the repatriation that came in early 18, right? But that whole point, 18% of people with a credit history, and this is like the lower end of the credit scale, their scores were raised by up to 30 points or more, which enables those that can least afford it to take on credit. Oh my God. This is like, don't change behavior because we need you to keep borrowing. It's a product. It's in everything. And this is how we make our money. So we don't care if you can't repay it. Just keep borrowing. Unbelievable.
Yeah, these guys benefit. It doesn't matter. They can withstand a big crash, but I assume that this is going to be. I'm sorry.
Right? What happened in 2000? Everybody's talking about what happened in 2008. The big guys got bailed out.
And it's going to be worse this time, right?
Oh, much worse, because they don't have the same depth of tools that they had then. And what's been really interesting for me is listening, like this morning, I was listening to Bernanke, Geithner, and Paulson at the Brookings Institute justifying their behavior. And I wonder, when I listen to them, I wonder about the truth in what they're saying. Because Neil Barofsky, if you guys have not read his book, Bailout, Megs, I think it's over there. You might want to read this. I'm going to reach out to him. I don't know if I can get him to come on. I've tried before and he said no. But he should be talking about it because he was there. Oops, thank you. And I don't, I mean, he was talking about what really happened. He was inside of the belly of the beast as managing TARP, which was the alphabet soup that they came up with to bail everybody big out. And what he says in this book and his experience is very different to what I hear these guys who want to create this legacy and this image of we were only trying to help and all of that. Well, come on. When you as an individual look at what's happening on Main Street, because memories are short, we don't really remember it, but we're still feeling that pain. Wages have not gone up like corporate profits have gone up. They're not sharing this windfall, but they were bailed out, not the individuals. We eat it.
I think if I recall, Bernanke's the same guy that said the internet would never take off.
Well, he said a lot of things. I haven't seen this in a while, but years ago, I saw somebody put together a little montage of everything he said and he was wrong, 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 because again, his job was to be a cheerleader, not tell you the truth. His job is to make you feel confident that they know what they're doing and they have it under control.
Fair enough.
And you mentioned about this next crisis.
Mm-hmm.
Well, I recently read a piece by Larry Summers, and it was at I'm pretty sure it was for the Peter G. Peterson Foundation, and he put together this whole little PowerPoint on how wonderful and successful quantitative easing was, because really the central banks made an awful lot of profit off of this QE and all of these bailouts, which that's not really their job. But what he also was talking about was this next crisis and the tools that he sees, and he's an ex-Treasury Secretary, instrumental in blocking oversight of derivatives, destroyed the division between deposit-taking and risk-taking banks, so he is definitely not my favorite person on this planet. However, he did have this sweet little list of the tools that they would use, and the helicopter money is one of those big tools. More QE for sure, but helicopter money, so people think they're getting something for free, but it has no value.
It's already starting in California, I think.
Yeah. They've been testing it. Yeah.
Oh. So I've heard this theory, and I don't know if it's worth anything, but I've heard this theory that Trump can kind of foresee. He knows this is coming, and he's actually kind of pushing us toward an economic reset. Do you think that there's any value to that?
Well, I think that President Trump is as smart as a fox. So I think that he was aware of what his role was to be inside of this transition. He didn't start it. He very well may see it through, at least to the crisis. But I think that he was aware of what his role was to be and that he's playing it.
I know, I want to talk about the petrodollar and the death of the petrodollar. Obviously, a lot of countries are now moving outside of using the dollar to trade oil, and that effectively ends our reserve currency status, which happens every so often. It's not anything to be, surprised about. Right. But what is that going to do combined with all of the other hyperinflation that you see coming?
Well, so if your viewers understand that to be the world reserve currency means that if you are any government or corporation going outside of your borders to buy, oil or anything else, lumber, steel, medicine, but oil was what helped us retain that status. Well, we've actually been losing that. We should have lost it in the early 70s, and we in fact went to the IMF and gave it back. But then Kissinger created the petrodollar, so we got to keep that advantage, because at that point anyway, we were the only country that could print or create debt and pay our bills outside of our borders with that debt. Nobody else could. But it was already in 2002, and people don't realize this, but the end of 2002 was the first time that the Federal Reserve was forced to buy our government debt. And in 2005, I believe it was May of 2005, Russia came out and said, you will no longer value any of our assets in terms of US dollars. From here forward, they will be valued in terms of rubles, euros, or gold. So that was actually a very big deal. And then, of course, in the crisis, China came out and said, what about the SDR, which is the internal fiat currency that was created back in '69 to take over as the world reserve currency by the IMF. So they tested all of that. And one of the mechanisms that they put in place then and tested recently was the substitution fund, where if you're sitting anywhere in the world and you have US dollar denominated products, so bonds or loans or whatever, you could deposit them into the IMF substitution fund, and the IMF will convert them into SDR denominated debt or loans or whatever. This is really critical because it means that all of those dollars that are out there right now being used to buy oil, lumber, steel, whatever, they won't be useful for that anymore. So all of those dollars have to come back here. And even though this is a global reset, my bet is, although everybody's going to feel this, I mean, everybody's going to be Venezuela. However, I think it's going to be worse here simply because we have a whole lot more, we have to pay the piper. We have a whole lot more of that garbage that's out there that's coming home to roost. And then that will create the opportunity fully for the IMF that really started positioning China as the global economic leader when they included them, their currency, in the SDR basket and allowed them to issue and the first SDR denominated bond, and actually tasked them with developing a market for the SDR. And there was a whole bunch of brouhaha when one of my viewers sent me a link that showed how a Chinese company, AC Chain, created a coin that, when purchased with Bitcoin or Ethereum, became an SDR. You know? And the whole function of that coin is to hold title to physical assets. The goal of the IMF is to be the world reserve currency and to have all global assets valued in terms of SDR. Now, it's under the control of the IMF, which are all unelected officials and bankers.
So, you know, I'm a fan of cryptos if they're decentralized and no one can control them. But
yeah,
yeah, and that's the difficulty, because they become more and more centralized, and it's a problem. But the West as a whole, largely, we see, you know, Mark Dice did a video where he offered people a 10-ounce gold bar or a bar of chocolate, and nobody wanted the silver bar. Nobody wanted the silver. They wanted the chocolate.
If you have asked me, I would have taken the silver.
Exactly. Like, people here don't even understand that it's money. The West as a whole largely has abandoned it. India, they wear it as, you know, they wear gold as jewelry. In China, they're telling people to buy it. What happens to us when fiat currencies die compared to other nations?
Well, you know, years ago, I did a study on what happens to all socioeconomic classes during these transitions. And what I discovered is, number one, there's a tremendous amount of depopulation, the very young and the very old and infirm. But if you are already dirt poor, let's face it, there's only so far down that you can go. And if you are wealthy and not leveraged, leverage is a real key in this whole piece, but usually, you know, very wealthy have tangible wealth. That's part of dynastic wealth. So they have the unencumbered real estate. They have, you know, maybe they have canary diamonds and really fine art and gold and silver. We're finding that the elite, the 1%, have been voraciously accumulating collectible coins that, you know, start in hundreds of thousands and millions of dollars. So they have a lot of wealth, and during these transitions, they have the ability to buy those assets that decline vastly, particularly in terms of fiat, during these transitions. It is typically the middle class that really has the greatest shift in standard of living because, like you just indicated, they're not prepared. So that's why my personal motto is food, water, energy, security, barterability, wealth preservation, and community. Because these are the things that we need to be able to survive this when the computers say no and there's no value left. If you depend on fiat money and fiat money products, you then become at the mercy of the government. And so food becomes the tippy top issue, and medicine becomes a secondary issue. If you need meds and you can't get them, but in your barterable portfolio, that's where we go back to silver, right? Because, and barterable gold, which are smaller pieces of gold, because silver ensures, since it's used across the global economy, there's always demand, period. This is not rocket science. And it's not, government doesn't have to say this. Silver and gold have properties that they have not been able to duplicate in the laboratory with anything else. So there's always a market for silver, and that in small pieces will enable you to buy those strawberries or that tank of gas or that prescription or something like that. Your barterable gold, you know, real estate's vulnerable. One of the reasons is because of property taxes. Because you can own the property outright, but if you can't pay those property taxes, you lose the property, and property taxes explode during hyperinflation because governments, that's how they get the money to pay their bills. It's the taxpayers. And so by having small fractional pieces of gold, number one, you know, and we have everything is formulated based upon historic norms and current true values, not Wall Street's values, but true values. So you want to make sure that you have enough of those physical metals to be able to pay those property taxes, and then, as we spoke about earlier, even convert it into some of those smaller pieces into gold or into silver, so that you're not wasting any of your wealth. It's the larger pieces, and this is what the 1% know, that they will then have the ability to convert into income producing assets like, for example, commercial real estate. Globally on average, and inside of this study, I looked at what happens to the different asset classes as well. And globally on average, commercial real estate dropped 75%. In Japan in the early 90s, which is what I personally think it's going to look more like, that number is 95%. So the wealthy, those that hold, you know, that's why you got to have gold, because it's hard to do that with you know, a room full of silver, where you can do it with, you know, seriously, on average, 25 ounces of gold or the equivalent would buy an entire city block, buildings and all. So that's what I know. People think that I don't like. I love silver. I own both of them. I bought more today or yesterday afternoon, whenever I bought more. And I bought 2 collectible Mint State 64 coins, and I bought a bunch of barterable silver. I buy both. I own both. But I look at what I'm trying to accomplish, and then what I convert those fiat pieces of paper into supports a specific goal. I mean, and it's not rocket science, just based upon repeatable patterns.
Okay, so I was going to ask, is it fair to say basically that everything goes on Black Friday sale during this? And if you've got gold, silver, something that's worth tangible value, you can buy up things and become wealthy.
Yes, indeed. Okay. But what you're going to look for is, it's called a cup formation. And which is, we're seeing that in both the spot gold market and the collectible gold market. We've got a double cup. So there was one at the start of the trend from, I think it varies a little bit between those two areas, but from basically 97-ish until 2004-ish. And then again, it started in 2008 and it continues on. In my entire career, and I've been in these markets, you know, well, I became a stockbroker in '86. So that's when I would have started to pay attention to that. I've never seen a double cup before, ever, never. So that tells me, what that cup tells me is that the smart money, the guys in the know, the guys that are at the top of this food chain have recognized an undervalued circumstance, and they're quietly accumulating while they're doing everything in their power, hence the manipulation, to keep you away. But that's really when you want to buy. That's when you want to do it. So yes, you're right. It becomes a Black Friday. It is a huge bargain, but you want to wait to see that cup formation. And that's part of the strategy and what we do. It isn't just buying gold and silver. I mean, you know, frankly, if you do that in physical form in your possession, you're going to be fine. It's just that the strategy that I develop is based upon the repeatable patterns, and our job, it's a relationship through this trend, because we want you to know, you know, what's going to support your goals, when to use it, where to use it, and when to shift.
Fair enough. I've got just a few questions left. One, briefly, how do people pick gold that's not, you know, you get rumors of fake gold, tungsten filled gold, all of this stuff. That's one of the reasons I like silver, is because it's, you know, the smaller denominations of silver, it's not worth faking usually. But how do you determine that for people?
That's a great question. Number one, only work with a reputable dealer that uses only mint direct dealers and has absolutely everything certified. So that's one big way. I mean, I think that you need to do that anyway, because you need to have that two-way market. But gold and silver have properties that tungsten and different metals do not have. So even if you're like out and about at an estate sale or a yard sale or flea market or something like that, and you come across something that's marked, it's not magnetic. So keep a strong magnet in your pocket and you can test it. And that's true for silver and that's true for gold. And in fact, we have a whole checklist of things that you, the individual, can do on your own to determine, is this real or is this fake? So if anybody wants it, they can call us at 888-696-4653 and, you know, talk to one of our precious metals consultant. We'll shoot it out to you so that you can keep it with you and see how you determine these things. Yeah. Which is, you know, and it's a simple checklist. You know, and then there's equipment. I think the piece that we bought might have cost us $800 or $900, and there's all different size kits, so they can go from like, you know, probably 25 or 30 bucks on up. But we got a fantastic one that you put it on this machine, and it tells you the purity level of what you're looking at. And wow. You know, so if it doesn't register, it's not real.
Come a long ways. I remember, like, I know they have acid test kits and things like that, but that's trouble.
Well, you know, it can work as long as you go deep enough. So you're not just, if it's coated, yeah. You know, you're not just getting the coating. But yeah, these little machines are fantastic. They're fantastic. Okay. But if you buy from a reputable dealer who's working with reputable wholesalers and only using certified products, that means they've been tested. They're real. And that's where you're going to buy it. And that maybe, because it depends, we have to see when we get there, but that is highly likely where you're going to sell it through. That's that know your customer kind of thing. So then it's not questioned. Fair
enough. So down a rabbit hole a little bit, you mentioned the 1%ers. Mm-hmm. You know, there's this idea that there are these like Illuminati families that run the world, and it's like, you know, the Rockefellers, the Rothschilds, the Morgans, and all of those names. Is there merit to that? Is it Illuminati families, or is it just, you know, a big banker, you know, free for all?
Well, you know, my nickname is Data Gal, which basically means if I can't prove it, I don't say it. But having said that, there is certainly a lot of historic and ongoing pieces to this puzzle that would make me believe that, yeah, they still control a lot of these markets, but they have removed themselves. And then you have that next layer of this global central banks that are moving all of these strings in perception management terms. That's nudging. But again, they want distance. So whoever is in charge in layers is always looking for distance so that you do not equate the outcome with the original perpetrator.
So you avoid the pitchforks and torches.
Exactly, exactly. But you know, it's interesting too, because what did JP Morgan say? Only gold is money, everything else is credit. So yeah, he knew it, but because he knew it and understood it, he also knew how to take advantage of the system. And that's what bankers know how to do, because they write the rules and they write the way the rules are accounted for. Just like people think everything's hunky-dory and back to normal from 2008. Heck no. The system died. I can prove it. I prove it all the time. The system died that we knew, that we grew up with. It died in 2008. And they have just kept it on life support with zombie banks till they could get the next new, brand new financial system in place. Will it include, you know, cryptocurrencies? Of course, because the problem that they're having right now with physical cash resembles the problem that they had with physical gold in the beginning of this grand central bank experiment. They had to take the gold away from the public so that the public had no way to control the government. In 71, Nixon took the gold, basically took the gold away from other countries by telling them, no, you could not send in dollars for gold at $35 an ounce anymore. He closed that gold window and took the power and handed it over to the central banks. So the governments, you know, in my opinion, and this is why I really don't get political, because those are not the guys that are driving this bus. Those are just the guys that are legalizing the theft. It is the central banks and the bankers and the corporations that are driving this bus. Period. End of discussion. And what do bankers know? They know debt and leverage. And that goes all the way back to the consumer that have grown. Everybody has. The governments have, but the taxpayers are responsible for that. The corporations have, but it's kind of complicated and convoluted, but they know debt. And the whole foundation of this entire global economy is one based on constantly compounding debt and interest, which goes to the flipping banks.
So you mentioned Nixon. Are we going to have another confiscation? I mean, it sounds like that would be a very tempting thing for them to do when this all goes down.
I think so. I mean, that's what even, you know, what happened in India, what happened in Venezuela, you know, what happened. It's happened. It's happening. It's happening in different parts of the world, you know, as you and I speak. So I think that an overt confiscation is inevitable, because isn't market manipulation a form of confiscation?
It is.
Right?
Are they going to
a form of confiscation?
That's true. I was kind of meaning like precious metals. Are they going to come for those again? And how can we protect ourselves from that? I mean, you could buy jewelry, but
well, and jewelry is certainly one way, you know, to do it, which is why you always see me with a lot of jewelry, and even costume jewelry, because it's physical, it's tangible, you know. But for me personally, because I want the monetary metals, and it's a much cheaper way to approach it, frankly, that's why I only do the collectibles. That doesn't mean super high-end collectibles, because with all of the market manipulation in the visible market, the spot market, that's really driven a lot of people away from the physical market. So even the collectibles, I'm able to buy those for what, 25, 30%, 50% below the current true value of an ounce of gold, and even more than that from the ounce of silver. So all flippin' day long, because the IRS puts them in a different category. The 1%ers that buy, you can see this in the ultra rarities index. You know, these coins start at hundreds of thousands and millions of dollars for 1 ounce of gold. Well, I kind of think that anybody that can afford that for 1 ounce of gold either, I don't know, writes the laws or could influence those that write the laws. So that's the category that I want to be in. And I can do it a whole lot cheaper than $1 million on a coin. I can do it for a couple thousand on a coin.
Fair enough.
So I believe that gives me a layer of protection.
That's a great idea, actually. So Lynette, let me ask, what is it that sets, you and ITM trading apart from everyone else? What makes you special? What can you offer people?
Well, I think it really is our approach, because it really doesn't take rocket science to throw you, into metals. But the strategy that we utilize, even though it varies from person to person, is based upon historically repeating patterns. Because even though we can't guarantee the future, that's our best shot. I don't know of anybody else that, certainly there are people that understand currencies and the markets better than I do, but I don't personally know them. And here we are super keen on educated choices. So when we position and help people position into a strategy, it's like a marriage with us. You become part of the family. It's not just for buying the silver and the gold. It's to give you the ultimate tools. I mean, that's what the YouTube videos are all about. It's to give you the tools to help you be able to identify the patterns and identify the true value, the fundamental value of any asset or instrument, so that you are clear on, do I want to buy it? Do I want to hold it? Do I want to liquidate it? What should I do now? Where are we in the cycle? I'm never going to get you to the second, but I'm always going to be able to get you to the phase. And if I can teach you how to recognize that, then nobody can ever pull the wool over your eyes. And I don't know anybody else that does the work that we do here. And our mission is really to help people through this entire cycle.
That's awesome. So you give people confidence in their own decision making. That's great.
We try.
Yeah.
We try. And and I'm sure if anybody called and talked to any of the precious metals consultants here, I mean, we've all been here for a really long time. I've been here since 2002, although in the market since 64. But most of the people back here have been here for, 8, 9, 10, 12 years. I mean, there's a lot of really strong, knowledgeable people here, and we all work together as a team. So,
well, Lynette, thank you so much.
I'm proud of us.
Yeah, no, you guys do good work, and you give out information for free, and that's a wonderful thing, and I really appreciate that you do that. That's a big thing. We believe in
educated choices for sure.
Yeah, that's the people I trust the most, the ones that give out the information. Thank you for coming on my show, and I really appreciate your time. Where can people find your, is it itmtrading.com?
It is. And also, we publish 3 times a week, plus the wonderful interviews that I do on our YouTube channel. So if you just put ITM Trading YouTube, then you can access that all the time. It's a pretty deep library, and we're always working on making that better. And, and of course they can call us at 888-696-4653.
It's a lot like, food. You better have it and not need it than need it and not have it.
Exactly. Exactly. Because really, if you're sitting on gold and silver and you understand its true value, not the Wall Street manipulated price, what, I always like to ask, what if I'm right and what if I'm wrong? If you're right and you're sitting in fiat money products, then they will lose their value. The goal is 2% a year. Okay. That's if you're right.
Hmm.
If you're wrong, they lose value, bam, just like that into hyperinflation. With gold, its most important function, and silver as well, is to hold your value of your work and your labor over time. So if today they manipulate it down, who cares? Because you always have something that has value, period, end of discussion. So frankly, your timing could be off, but it really doesn't matter if you're right or you're wrong. If you're holding the physical metals, you now have something of real value that is not predicated on a government saying it does or does not.
Fair enough. Well, thank you, Lynette. I really appreciate your time. Hopefully, we can follow up in the future and maybe halfway through this thing and we can do another one.
Absolutely. This was really fun, and you asked great questions.
Thank you, Lynette. I've been following it since I was about 16 or 17, actually. I found out about the Federal Reserve and how corrupt everything was. And I'm like, you know what? I'm not following the traditional path. I'm going to do my own route.
That's really wonderful. I wish more people would do that. That's what my work is all about. It should be taught in schools, but then people would make different choices and not go along with their plans. But yeah, great questions. This was a lot of fun today. Thank you.
Thank you, Lynette. Have a wonderful evening, okay?